The colonial mindset is discriminating against African banks from level competition with their Western counterparts, according to Roosevelt Ogbonna, MD CEO of Access Bank PLC, at a panel session in Casablanca at AFIS 2024. Arise Business Correspondent Rotus Oddiri sent in this report.
The 2024 African Financial Industry Summit in Casablanca, Morocco, featured a very engaging and thought-provoking panel which discussed the topic of African banking powerhouses in global financial hubs. The panel featured Roosevelt Ogbonna, MD, CEO of Access Bank, which is headquartered in Nigeria; Ini Ebong, Deputy Managing Director of First Bank PLC, also headquartered in Nigeria; Amin Bouabid, CEO of the Bank of Africa Group, headquartered in Casablanca; and Kamal Mokdad, CEO of Banque Populaire, also headquartered in Casablanca. Expansion of African banks across the globe was the first topic that was dissected, with Roosevelt Ogbonna identifying key markets across the globe.
So for us, we look at our market or our business from three perspectives. The first is ensure you're in global financial markets. That's the first thing. Ensure that you're in global trade hubs. That's the second. And third, build scale within the local markets. Then you can compete effectively. Now, what do we see as a global financial centers? We see five as it relates to the African continent. So there's London, there's New York, there's Hong Kong, there's Paris, and there's Tokyo. Our view is that given Africa's play today, we only need to be in London, New York, Paris, and Hong Kong. We're in three of the four. We expect to be in the US, which is the fourth one, by fourth quarter of 2025 on the outside, first quarter of 2026. From a global trade hub, we see five of them. So London, of course, Hong Kong being the gateway to Asia, Dubai, China, as well as India. Rep office in China. We have a rep office in India specifically for this purpose. But the reason we've set up shop in Hong Kong and Dubai to take advantage of that is we find it easier to raise capital from those markets. So in the global trade hubs, we do essentially trade business. The global capital markets, we raise capital to support the trade flows that are going in. So Hong Kong is only to support Far East Asia and trade flows into China, working with our rep office there. Our Dubai office used to play that role before Hong Kong, so Dubai is now focused on the Middle East. And there are many buying houses that used to be in Hong Kong and Dubai. And of course, given our extensions into Mauritius today, we're hoping when we conclude our Mauritius transaction in the first quarter of next year to then play that active role working with India. So that's the way we've set it up.
Ini Ebong of First Bank spoke about the growing integration between African and Asian banks, but said the global financial architecture is still very westernized.
It is clear that the level of economic integration between Africa and Asia has vastly increased. You yourself mentioned trade flows alone are almost $300 billion. The interesting thing is that the underlying economic integration is there. However, the financial system architecture is still very much Western oriented. And what do I mean by that? You'll find that the banks, like ourselves, still rely on largely Western or the global international banks to finance that underlying trade. So I think it's very important, and we will start to see the evolution of much closer relationships between African banks and Chinese banks or other Asian banks to play that role. And hence, it's then becomes extremely important for us to locate ourselves in those critical hubs so that we can facilitate that intermediation.
Because right now, a lot of that trade is happening through a third currency more often than not.
Precisely.
The US dollar, running it through SWIFT, rather than, say, Naira, Renminbi, or Kenya shilling, Renminbi, or Moroccan dirham, Renminbi directly.
Well, I mean, it's not just the currency. It's really the whole financial system architecture. So you're doing the underlying trade, that $280 billion worth of trade, how much went through global correspondent banks relative to African banks or Chinese banks? A very small amount, right? So it's really about establishing those relationships, establishing that integration between Africa and Asia, building a financial system or using this financial system architecture in a much more efficient way and building those relationships with those banks.
Amin Bouabid of the Bank of Africa Group said that African banks need to reinvent themselves to take over territory ceded by European banks. He also said they need to grow and made an example using France, saying France's GDP is bigger than the entire African continent.
Like you mentioned in the beginning, European banks are exiting the market, the African market. We have to reinvent the new banking of Africa. It will take time. The mutation will take time. It's not something that will happen tomorrow, for sure. First. Second things, when you look at these countries, for example, you look at France or whatever, UK, you look at the GDP of France, is the GDP of all Africa. So we cannot afford to be having the same size. So we have to play together. We need to bring all investors together. We need to bring savings together. We need to do things together. We have to reinvent this model. We don't know what model will survive tomorrow, but at certain times we need to be involved. Concerning also, today we are talking as African. So our ambition is to develop our countries, not to do the same as the foreign bank were doing. Okay? Today, every day we import, every day we dig our thumb. Okay, so my main objective is to develop my continent. By developing this, that means we need to rethink the model today. Okay? So to do that, we have plenty of challenge to overcome, but we cannot do it alone. We need to have the political will. We need to have, of the countries, definitely. We need to have the central bank regulation, not strangulation, to give us more capacity to move. We are facing some challenge that other banks in Europe, they don't have. Financial inclusion. Local savings, we have a story to tell if you want to attract foreign investment in our continent. Today it has been mentioned yesterday by the Minister of Finance of Morocco, is 3%, the joint investment in the whole Africa is 3% of the world investment. It's nothing, it's like a broker commission. and you adopt if you take up North Africa, it's maybe less than 1%. So definitely we need to have a story to tell, to have a regulation and then to move. Concerning the corridor, we already at the group level, we have plenty of corridors, but there is no regional integration at all. So people, they don't make any choice. So that means everybody has north-south relations, and there is no business between the countries. Everybody wants to make the same things. So we need to set up the priorities, to see where we want to go. It's important. So all the subject that has been raised today about money, the cost of transfer of money through currency, this is enablers. But it's not, we need to set up the dynamic. And for that, we need everybody to sign on a document saying, I want to bring the level, the contributions of the financial industry in the GDP at a high level.
Roosevelt Ogbonna of Access Bank also discussed the need to boost intra-Africa trade, which prompted a question from Arise News later on in the panel.
But just think about if we can catalyze enough capital within the continent to allow us trade significantly. We might not get a 60%, but think about where the continent will be if we move from 16 to 30% or to 40%. The Eurozone is at 70+% intra-Eurozone trade. So Africa can get there, right? So and then the currency conversations are much easier to handle. We're not going through third-party currencies together. So I think that's one thing we are very keen to pursue, working with the likes of IFC and Afrexim to see how we can get that done in due time.
And there was one particular part of the conversation where Roosevelt Ogbonna said that the colonial mindset is discriminating against African banks from getting bigger deals. Here's what he said.
Now, without calling names, there are 3 presidents who say, this is something we're championing. If you watch the president's interaction with President Macron earlier in the year in Paris, some of them challenged him to say, this global system doesn't work. It doesn't work for Africa, right? And if we're going to change it, certain things have to be done differently. And I think for one, there's no African government who should have any conversation in the room if their reserves are still kept to the international banks. You're keeping your reserves in foreign currency. Those foreign currencies are not placed with local banks or global African banks who can manage your currency. Now, if we get into the room and we're pitching, and there's Standard Chartered, Citibank, JP Morgan, and any one of us sitting in the room, the chance that none of us on this table will get that deal. It will go to the foreign bank. So we have to change the colonial mindset, which kind of associates safety in financial services to foreign banks. That's the mindset we need to change. Right? We are no different. And this is what I saw one of the rating agencies here, Moody's, my colleague, a friend of mine from Moody's, and I keep challenging them anytime we're in the room. Tell me why I am different from JP Morgan. You need to convince me. Because we go to the same schools, we beat them in class, right? We do the same banking business, we're no different, right? So the system has been rigged to ensure that we never look up. The rating agencies will come and say, well, you trade in your local currency, your functional currency is Naira, XYZ, you need these 100 things for you to scale through. The business and banking practice is no different. That's the truth.
Then it was time for Q&A to basically take questions from the audience. And of course, Arise News did manage to ask a question. And my question was on a unified African currency. I just wanted to pick the brains of the bankers here of what a unified currency, the role that plays in boosting trade. Because you mentioned wanting to get trade in Africa from 16%, I think 70% where the Europe is, but Europe has the euro. And of course, different countries on the African continent use different currencies. Much of the francophones are pegged to the euro, so their inflation is lower. So, and then of course, the issue of monetary policy and so on. So, is that part of the conversation in trying to get trade boosted in Africa through the banks?
I think the AU is doing some work on that. I don't know how far they've gone, but even without that, I think having banks like us on the stage who are spreading across Africa means that that conversation could be out of the room. And the reason I say this is that today, if you're a customer in Botswana and you want to do business with another customer in, I don't know, DRC, right? You don't need to talk about the dollar because Access Bank will play the mid-treasury role. So for the Angolan customer, it's a local transaction. For the Access DRC customer, it's a local transaction. So currency is really not the conversation. So that central treasury will play the role. Right? If we can get Africa to the point where we have a single currency, excellent. But if we can't, I think given the way we're structured today, we can still achieve that, right? Without necessarily waiting for that currency unification to happen.
Ini Ebong also responded to my question. That's the Deputy Managing Director at First Bank. And he said something very interesting. He said it is actually a myth that there is not enough intra-Africa trade.
The biggest fallacies that exist is that there's limited intra-Africa trade. And, it's not quite true. I mean, if you, especially across sub-Saharan Africa, go to any border town, you will see the amount of goods and services that flow across these borders. Transactions do happen, and those transactions happen in African currencies. So if you're in Nigeria, it will happen between the CFA and the Naira. It's freely exchanged at the border. People determine what that Naira CFA exchange rate is, right? The challenge is it doesn't flow through formal channels. And that's really what we should be asking ourselves. And again, when we sit with regulators and some of the things, the key concern for me is that we're not spending enough time, or the regulators are not spending enough time in analyzing what are those restrictions that prevent these things from happening, right? To formalize this trade so that a bank in Nigeria will transact with a bank in Benin Republic formally and allow these trade flows to pass through formal channels. Now, a lot of it is tied to regulation. In some ways, I think our regulators tend to be perhaps a little too nationalistic when it comes to exchange controls. And I think we need to step back and look at ways to find ways to streamline these and relax some of these rules. And if we did that, I think we should be able to capture a bit more of these flows. I think we're very far away from single currencies, whether they're in regional blocks or Pan-African, but that shouldn't be an obstacle. Exchange is but a number, right? If we create the systems, if we remove the restrictions, then we'll be able to transact freely across markets.
All in all, a very engaging and informative session on building up banks on the African continent to compete globally. And yet another highlight here in Casablanca. From the African Financial Industry Summit here in Casablanca, Morocco, Rotus Oddiri, Arise News.